Ladies and gentlemen, welcome back to the channel. Here in this video, we're going to get into all of your typical data you need to know for AMC stock, but we're also going to look at some of the steep discounts that retailers are giving. This is ahead of Black Friday. This is really record deals for a lot of items that you have not seen since the last real recession, which was the great financial crisis back in 08, 09, and 010. So we're going to get into that. We're also going to look at some charts here for equity markets that does suggest we've hit a bottom. Potentially a lot more gains could be to come, but ultimately if retailers are discounting items the way they are, this could mean we're heading into a recession, or at the very minimum, one thing is definitive: the next 2 months or so here, you could see some big deflationary numbers in your CPI report. We got a lot to get into. I hope you're ready. If you are not, you better get ready, and you better hit that like button and subscribe to the channel because we're jumping straight into it, and it is free 99. Congratulations to everyone a part of the trading community that hit that over 1,000% winning trade on target and over 400% on the AMAT, the applied materials trade as well. Still down a little bit on that PayPal trade, but per this data we're about to go over, it could get exciting here for our market. So first things first, let's go ahead and talk just briefly on AMC stock. AMC stock has been falling a lot recently. You were finally green on Friday. A little bit of a bounce is what it looks like. The Russell itself was pretty green on Friday as well, up 1.37%. So that's nice to see AMC stock finally green at the same time the Russell is green. AMC's kind of just been falling like day in, day out. I know you've had, one green day here on November 14th, but other than that, it's just been red day after red day after red day ever since November 6th. It's been absolutely brutal. But again, like I said, you were finally green on Friday. I would say that is a little bit of good news. Now, what's going on currently for our markets? It's interesting. Okay, so FX Evolution over here on X shares a lot of, I think, insightful things that most of you guys would find insightful and enjoyable. Now, this is a chart of the inflows and outflows to treasuries. I believe it's on a weekly basis. And then you have your 4-week moving average here in this blue line. And you've been trending upwards all throughout 2023. Since you load or it hit the low in December of 2022, you have trended upwards for treasury inflows. Well, you've seen a rapid change here over the past week or so. That's with the drop in bond yields. That's when investors actually buy treasuries, right? So the first outflow to treasuries is good news. That usually can mean, well, you're probably going into a rally. Take a look back here, during this period of time where my cursor is, right? Maybe we'll just save the image and be able to pull it up a little bit bigger over here. Let's just pull it up. Okay, so here we have the image pulled up. We'll zoom in a little bit. This probably makes it easier to see for everyone out there. So this period right here, from like 2019, the end of 2019 through 2021, besides this Rona fall right here, where you've seen this big spike, you were seeing a lot of outflows, right, to treasuries. And this was a period of time the markets went absolutely parabolic. If you take a look at 2019, it's really remarkable what happened leading into the Rona itself. 2019 was a face ripper rally, just trended upwards really throughout the whole month of December, even into 2020 itself. But if you look at October, the low of October back here through right before the Rona, you were up about 31% on the NASDAQ within the course of 4 months. That was insane. Okay, so you could make the argument on why, right? Maybe it was everyone thought we were heading into recession. That was not materializing at the time. But 31%, a lot of that could, I believe, be correlated to the treasuries, right? To the outflows from treasuries. When there's outflows to treasuries, usually that turns into inflows for stocks. And you can see that here with this chart, right? So you have, it looks like treasuries and stocks here. So stocks right here, and then treasuries. Well, you're starting to get a downtick in treasuries, uptick in stocks, right? Direct correlation, as you can notice here from 2019, you started to see a downtrend in treasuries and stocks started doing very, very well. And I believe this is looking at the Russell itself. So yeah, you definitely see a correlation here, and that has started. But I mean, when it usually starts, you can continue to see that follow through. So I think that is pretty impressive as well. And now, look at this. CTA positioning just pulled off one of the biggest swings ever from oversold to majorly overbought. This move is no joke. Keep your eyes glued to this chart. It's about to be a crucial watch for the flow heading into 2024. And yeah, you could see you were really oversold back to like your Rona lows, back to your 2018 crash lows, and all these volatile periods of history. And now you're at the highest point you've been since 2014, coming out of the global financial crisis. That's kind of insane. At the same time, we're still not at a new all-time high. We still have a lot of ground to recover, I believe, in stocks, but this supports that we could see some sideways trading action for a period of time. That's for sure. Now, this could be a little alarming for stocks. Black Friday came early this year, signaling worries about holiday demand. And this says here in the key points, early Black Friday discounts were far higher this October compared to prior years, a signal that retailers could be worried about holiday demand. Both the depth of discounts and the total amount of items on sale were higher in October compared to the last 4 years. Some retailers are relying on discounts to drive demand among cautious investors. Yeah, I invest too much. Nonetheless, it says promotions across a range of categories, including apparel, appliances, computers, were significantly higher last month than in 2021 and 2022. Data from Adobe Analytics show. For an example, the price of apparel online was 9% lower throughout October compared to the beginning of the month. But in 2021 and 2022, it was just 2% and 5% lower, respectively, the data shows. Now, just taking a look here at this interactive chart, your dark blue is 2023 in October, your lighter blue is 2022 in October, and 2021 is the gray. 2021, there was like no discounts anywhere. Computers seen a 5% discount, electronics at a 5% discount, but basically nothing across the board. Like literally almost nothing, especially sporting goods. That was 1% of a discount. Now look at the light blue. The light blue was larger for toys and electronics in 2022. Now in 2023, everything else is higher than 2022. Apparel, appliances, computers, furniture, sporting goods, televisions, all of that is higher this year for discounts. The only thing that is not higher is toys and electronics. That's not great. That's not showing you great things. Now, we already know what Walmart just said about the consumer. Walmart said customers are leaning heavily into major promotions as they watch their spending and search for deals. As customers hold out for lower prices, the company has seen a drop in purchases before and after a sales event. He says, our events have been strong, he said. We've been pleased with those. Halloween was good overall, but in the last couple of weeks of October, there were certainly some trends in the business that made us pause and kind of rethink the health of the consumer. Okay, if Walmart is rethinking the health of the consumer, a Walmart that is supposed to cater to your lower income demographics, right? Individuals that shop at Walmart are a lot less likely to go to Meijer's or Target, where items can be 20 or 30% higher for the same exact thing. People go to Walmart when they want to spend less money, right? What's their slogan? Buy more, save less, some crap like that. Walmart has the price match guarantee. Like literally, you cannot find lower prices for anything than you can at Walmart. They will match your price. It's literally impossible. Now, with that being said, if Walmart is sitting here saying deflation is coming, quote, in the US, we may be managing through a period of deflation in the months to come. And while that could put more unit pressure on us, we welcome it because it's better for our customers. Lower prices are bad, okay? Because that means companies taking less revenue, companies lay people off, and then those people can't buy products, and then it's a self-fulfilling just circle at that point. So this is really not good. Walmart has not said anything like this in a very long time. And they specifically point out the last couple of weeks of October. That suggests that this quarter overall could be pretty dang weak. We'll obviously have to wait and see, but comping sales numbers from last year, I don't think they're going to be as impressive this year, and everything is inflation adjusted, right? So people are buying just a lot less items, even though those items might cost more, they're still buying a lot less items. So some troubling things that you're definitely seeing there. Now, this is a little chart of the average retail discounts in the US in the month of October. Now, 2023, the average discount is 24%. In 2022, the average discount was 20%. In 2021, the average discount was 13%. 2020, 17%. And 2019, 17%. You are what, 7% higher on your discount than pre-pandemic? What? And this news came out on November 7th that credit card balances spiked in the third quarter to $1.08 trillion. This is a new record. Now, I know a lot of people are concerned about a recession. I know a lot of people are looking at credit card debt. A lot of people are looking at some of this news that continues to come out, like these discounts and what Walmart just had to say. I'll tell you it just bluntly and honestly. The only thing that matters is, do people lose their jobs or not? If people lose their jobs, that's where this situation could turn from looking bad to actually bad. If people don't lose their jobs, then this doesn't matter all too much because people will continue to spend. My mom was saying it just last night. She was saying people are just going to spend. I was telling her about these things, what Walmart had to say, what the credit card debt looks like. She said people are going to spend. People are going to swipe the card until they can't anymore. And they can't anymore when they lose their job and they can't make their credit card payments. That's just the bottom line to it. I don't know if that's going to happen. I don't. If deflation really does set in the way that Walmart says it will, then yeah, expect people to get laid off. Deflation causes layoffs, causes recessions. The only time you've seen deflation is really during recessions. Out of the last 900 months of inflation data, there has been 30 months with deflationary numbers. Prices continue to go higher, but only 30 months out of 900, that is 3% of months where you actually see deflation, prices going lower. Prices don't go lower. If Walmart is saying prices are going to lower, well, that's a problem. And you're almost in deflationary territory on your headline CPI. Headline CPI came out at 0%. So you're almost there. And the next, couple of months of CPI reports, you could actually go into deflation, technically negative CPI reports. And that might not be taken as good news for stocks because deflation, again, means recessions. So important to keep in mind there. Now, let's go ahead and give you guys a run through of the data here for AMC stock, and then we'll probably go ahead and wrap up this video. I will go over kind of what I expect from AMC if, we do go into a recession or if we skate past one or how to look at those kind of things. Now, short interest of free float at 9.78%, $143 million worth of short positions. Days to cover 0.84, 19.34 million shares that are currently sold short. Shares out on loan 18.32 million. Cost to borrow 1.31%, utilization of 42.24%, and a short score of 58.86 out of 100. Now, if you take a look at the option activity we seen on Friday, you had 2 orders totaling $177,000 with a positive order value of 100%. So things looked a little bit better on Friday than they have as of recently. That is great news, but unfortunately, you're not all in the clear yet. A big story of this upcoming week is going to be Nvidia earnings, and then the just digestion of all of this news. We've gotten a lot of news. We've gotten a lot of earnings lately. We heard from the Fed. We got the CPI report. There's a lot that is being worked into the markets, and I personally think this is a great shift of capital, right? There's a huge shift of capital currently ongoing in our markets that is going to take some time, okay? It's not going to happen overnight, and I believe you've started to see that actually playing out, but it's going to take some time, and I think that capital goes into small caps, mid caps, stocks that will benefit from rates going lower, in which AMC is in that category. So I do expect at some point, maybe in this upcoming week, maybe the week after that, AMC stock will start to trade a little bit better, and then on any good or bad news, that is really going to affect the stock. Now, if the recession narrative does play out, we actually do go into recession, well, you could target $5 per share. That's what I'm looking at. If the recession were to be bad, you could hit $3 per share. That is a reality that you should be prepared for. Now, I personally am leaning a little bit more on the bullish side than not, but it is a possibility that could happen. And if things are good and things are okay and we skate past recession, even if it's not the best economy, then you could easily, go through that MOAS, go through the short squeeze, see more liquidity in our markets, and get some sweet gains on your positions, guys. So, and that could obviously be $100, that could be $50, that could be $20. Who knows ultimately where that could be to the upside. Hit the like button, subscribe to the channel, and source your comments, questions, or concerns down below in the comment section. Thank you guys for watching. Enjoy the rest of your freaking day, and I will see you in the next one.